Hello everyone! Welcome to the first in our three-part webcast series on the Equity Method project. I am Filippo Poli, technical staff at the IASB, and today I am joined by my colleague Mustafa Muit.
Hello everyone! We have structured this series to give you a comprehensive understanding of the exposure draft on this project.
In the introductory webcast, we will explain the IASB's objectives for publishing an exposure draft on this project, and we will guide you through how we developed the proposals.
In the second webcast, we will dive into the main proposals. Finally, in the third one, we will cover the supplementary proposals.
Let me start by explaining why this matters to you. IAS 28 requires an entity to apply the equity method to its investment in associates and joint ventures. The equity method, in short, requires an entity to initially measure its investment at cost. Thereafter, the entity adjusts the carrying amount of the investment in the associate for its share of changes in the associate net asset, such as the share of profit or loss or dividend distributions. Now, let's discuss the objective of the project. Mustafa, can you walk us through that?
Of course. Let me break it down into a few key points. So the equity method has been in use for a long time, and it's generally well established. However, over the past years, the IASB and Interpretations Committee have received a number of application questions. In some instances, the IASB addressed those questions by adding requirements to IAS 28, whereas some questions remained outstanding. This matter was raised during the IASB 2015 agenda consultation, and in response, the IASB added these projects to reduce diversity in practice by answering those application questions. The IASB has also taken the opportunity to improve the understandability of IAS 28 by regrouping the requirements to follow the style of the most recent IFRS accounting standards.
Now, let's talk about how IASB approached the project. The IASB decided the project should answer outstanding application questions on how to apply the equity method. Having chosen the application questions, the IASB identified the principles underlying IAS 28 and used those principles to develop answers to the questions. For some of the questions, the IASB also considered the principles in the conceptual framework and the requirements in other IFRS accounting standards.
Thanks, Filippo. Can you also tell our viewers how the IASB choose which application questions to answer?
Well, as noted, there was a past backlog of questions. The IASB considered these its past work and work from other organizations. It also received input from some national standard setters and large audit firms. After developing an initial list, the IASB defined selection criteria and applied these criteria to the initial list of questions, selecting those questions where it could answer and where answer would help reduce diversity in practice. But this does not mean that the project is a narrow scope amendment, and far from that, in fact, the proposal and exposure draft are wide-ranging.
You are right about that, Filippo. So let me add some more context about the scope of the exposure draft. It includes requirements that answer around 20 different application questions. These cover different aspects such as the measurements of the cost on initial recognition, accounting for a purchase of an additional ownership interest or a disposal of an interest, accounting for a dilution of the investor's ownership interests, accounting for transactions between an investor and its associates, and recognizing an investor's share of losses. Also, to complement the proposed amendment to IAS 28, the IASB is proposing new disclosure requirements that will enhance the information about these investments. We will illustrate all these proposals in the second and third parts of the webcast.
To find out more about the project or submit comments on our consultation, please visit the IFRS Foundation's webpage. The comment period is open until the 20th of January 2025. We hope this introductory webcast has given you a solid foundation for understanding our equity method project. Remember, this is just the beginning of our three-part series. In our next webcast, we will look at the main proposal in the exposure draft, and in the final webcast, we'll cover the supplementary proposals. Thanks for listening, and we look forward to seeing you in our next webcast.